always happy to hear from you and provide help. So tonight we'll be talking about tax prep. This is an incredibly broad topic because there's so many different ways your taxes can be unique. My main focus tonight is talking about the situation for entrepreneurs. Let's get the slide deck going. Here we go. So I have three primary objectives tonight. I want to give everybody up to speed on how Canadian income taxes work. The focus is on personal income taxes. We won't be talking about corporate taxes. However, I will explain what some of the differences are there in terms of how they relate to you as entrepreneurs. The reason I'm keeping that focus a little bit narrow is because this is something people can easily spend an entire year studying, and I'm giving you a crash course in 1 hour to get you feeling comfortable at all this. So once we've talked about the basics, we'll talk about some of the common deductions and expenses that you can either make from your own personal returns or from your small business. And a third major pillar here is, again, talking about what's the difference between running your own little business or incorporating a company that may be poised to grow. I have some of your questions, like Zoya mentioned, that I've integrated into the presentation. I'll cover as many of them as I can as we go. And at the end, we'll save some time for some more Q&A. In terms of who I am a chartered accountant. We're now referred to as chartered professional accountants. I've been working on personal income taxes, among other things, at Ernst Young. I have done volunteer work at community low income tax clinics where we help people who are generally on social assistance or retired or students. And I also serve clients through my business, Westtown Tax, located in Roncesvalles. In addition to that, I also teach IT governance in New York University's Masters of Financial Accountability program. So if you have questions about IT, you can reach out to me offline about that. So there were a lot of really good questions. I've tried to aggregate as many of them as possible. One of the first things we'll talk about is what's going on because of the COVID-19 scenario that has us all here on a webinar. Once I've covered that hot topic, we'll talk more about Canadian taxes in general, how Ontario special credits figure into the mix, how to prepare yourself for tax season, some of the easiest ways to file your tax return, what installment payments are. We'll start to get a bit more specific there, how to file your return electronically, and you can do it for free if you have the time and the inclination. We'll talk about whether or not you should incorporate and what some of the drawbacks and advantages are to doing that. And we'll also talk about expenses. This is a very popular topic and it might only have one bullet here, but we talk quite a bit about that in this presentation. And we'll talk about some specific topics such as EI for self-employed people. All right, so that's the quick rundown. First of all, I hope everyone's doing well in this difficult time. I know it's a huge shift for a lot of people. A lot of people who are either employed or self-employed are suffering a lot because of this, including many of my own friends. So there's some important information and it is changing day by day. This information is as current as I can make it, but please forgive me if anything's changed since the last day or so. The CRA, which is a Canada Revenue Agency, the taxman, they have announced a delay in the regular tax filing deadline for your 2019 tax returns. Normally, your taxes would be due on April 30th. That would include both the payment for what you owe, as well as the tax return itself. And there are exceptions to that, but I'll try and keep it simple. They have, for now, extended that deadline until June 1st. So you do not need to file your tax return until June 1st. If you're self-employed, you actually normally get to wait till June 15th anyway. So everyone gets at least an extra month, no matter what their personal situation. So that's really good news because this is not the best time to be going out to meet with any tax preparer. We don't need to impair social distancing. I'm not going to guess what the government's going to do, but if the crisis does get extended, I would not be surprised if there may be more extensions. Having said that, you can do a lot of this work electronically. If you are able to get your tax return filed, you can do it remotely. You can contact any tax preparer or you can do your tax return yourself and file your return electronically without actually having to go to a mailbox. This is true for most people, especially if you filed your taxes before. If this is your first time filing, we can talk about that offline. But for 95, 99% of people, you can file your returns electronically. You can still do it even if you're in isolation, and that's a good thing. And also important, the normal deadline to pay your taxes owing is April 30th. That has been extended until August 30th of this year. Again, this may change, but until August 30th, if you owe money, you can wait and not pay until then. This is recognizing the fact that a lot of people are in precarious situations right now and may not have stable income. So if you do owe the government some money, they're letting you hold on to it until then. Um, and when I do share this slide deck through Zoya, there will be website links to many of these points I'm sharing. So if you don't see a website link on top of what I'm talking about, it will be in the notes of this slide deck. So just keep that in mind. In terms of what you can get right now, this is a little bit beyond personal income tax, but I thought it was worth sharing. I've stolen that graphic with credit to the CBC on the right there. This is a summary as of a few days ago with respect to what the government's allowing everyone. I did mention the delay in paying your taxes. Some other things that are going to change are the GST credits or the HST credits in Ontario. If you are currently qualified to receive an HST rebate check, it will be increased by each person to $300 per adult and $150 per child. You do not need to do anything special to qualify for this. If you have already submitted a tax return in 2018 and you were eligible for credits then, the government will automatically increase the payments they're sending out. This is a really huge boost. If you have children, they're also going to increase the Canada Child Benefit. And the only thing that you do need to take action on is the employment insurance benefits. There are basically two major benefits. There is one benefit that is available to people who normally qualify for EI because they've already been making payments. There is a second benefit going to self-employed people who were never making submissions to EI. They will also get payments in April, but it will be necessary to apply for those. You cannot yet apply for those, but the government will publicize that information probably in the next week or two. As you can imagine, this is a brand new change, and it takes the government a month or two to do a good job with anything on a website in a normal situation. In this case, they're spending 2 or 3 weeks to get the necessary authorizations in Ottawa to do this, setting up a website. When you do make the claim, unlike regular EI, where you have to jump through a lot of hoops, the government's promising that this should be a relatively easy process where you submit your personal information, check off a box or type in, yes, I honestly claim this situation applies to me, and you should be getting a payment sent out to you shortly. I can revisit this some more, but I thought that was a really important thing to start off with because this will be very important for a lot of people. All right, so in terms of Canadian personal income taxes, if you've never filed your return yourself before or always just throw this into a black box and let someone else do it for you, I wanted you to understand what it is exactly that's going on. And this will answer some questions people have asked leading up to the whole presentation. One of the big questions is, if I'm working for Uber, if I'm working as a nanny or using the Jiffy app, do I have to declare my income? And the classic answer is, it depends. If you are earning in total below $10,000 to $12,000, you can simply not file a tax return. Anybody in Canada, in Ontario, the number is about $10,000. The exact numbers are in the notes here. Can earn that money tax-free. You can actually earn a little bit more than that, but without any special credits, without any special rules, you can earn up to $10,000 tax-free, and you don't have to file a tax return. So that's a great way to start the presentation about preparing your taxes, by me saying, here's where you don't have to do it. Having said that, there are many reasons you should file your tax return. Most importantly, the government provides many, many benefits. And if you are earning in the relatively lower brackets in the $10,000 to $40,000, $50,000 range, in order to receive benefits, you need to file a return. Once you've done that, you can then receive a series of credits, and we'll go through them in detail. A couple of them include the working income tax benefit. This is meant to help people who are climbing through the lower tax brackets. There's the HST credit, which is meant to make up for some of the 13% tax you pay when you buy things for personal use. And there are other things such as the Ontario Trillium benefit, which is essentially a small rebate check if you are paying a lot of rent and do not have a lot of income. I'm going to walk through the example of a person who is earning a hypothetical $40,000 so you can just see what the numbers look like in this person's situation. If you're earning $40,000, you are going to be taxed according to this table here. It looks a little bit intimidating once you go into the higher brackets, so we're keeping it simple with a relatively low income level. As you can see, if you're earning $40,000, and I had to add in some pennies to make this round properly, that will be multiplied by a rate of 15% federally. 15% of 40,000 is $6,000. Makes sense, right? Now, that is not the only tax that you pay as a Canadian. Every province has its own tax rate. Ontario, for example, charges 5.05%. So, similar table, if you're earning $40,000, the math runs through like this. You're taxed at a 5.05% rate, and that ends up being $2,020. Now, there's a little bit of a catch to this, and it's actually sort of a good catch, and I'll explain what that is in a moment. So this taxpayer has earned $40,000, and $8,000 sounds like a lot of tax money to pay if you're only earning $40,000. So why do you not actually end up paying that much money? You get those federal tax credits I mentioned. Even if you're earning $40,000, the first $12,000 that you earn, you can't see me pointing at my screen, but I'm pointing at the 12,000. Actually, there is a highlighting tool that I should use here. It's okay, I think you get the point. The $12,000 credit is cancels out part of the taxes that you owe. All those credits, and in this case, this person would earn $15,000 in credits, would be multiplied by 15%. So the $6,000 tax bill is reduced to $3,638. So that's a better deal now. You don't owe as much money. Now, Ontario has a similar type of scenario. You get about $658 in credits based on $40,000 in income. And so your $2,000 is reduced by $658. But then we have something called the Ontario Health Premium. It's an extra tax that helps pay for our healthcare system, and I don't think many people would have a problem with that these days. That number depends on how much money you earn. If you earn under $20,000, you do not actually pay that tax. But from $20,000 up to over $200,000, you'll pay a sliding scale amount, something like $300 or $900, or an amount in between. In this taxpayer's case, they would owe $400. So you have 2020 minus 658 plus 400. Your Ontario tax bill is $1,811. Before I continue, you might be thinking, oh no, am I doing it wrong? Am I supposed to file one tax return for Ottawa and one for Queen's Park? No. The way our tax system is set up, you actually only file one tax return, and this is all combined. There are several forms, and if you're using tax software, it's all done pretty much automatically. One thing that I want you to understand about that is this is not true for all of Canada. Quebec has a very fancy special separate system, and I'm not going to get into that because I just don't do Quebec taxes. They have their own system. But in Ontario and most of the rest of Canada, that is how taxes are prepared. So you have $3,600 in federal tax, $1,800 in provincial tax, $5,449. Are we done? Not quite. Why do we not end up owing $5,000 in tax on $40,000 in income? The reason is you have source deductions. If you're working for any major company, the company, well, any company period, the company is obligated by law essentially to deduct a little bit of money off every paycheck. And you've probably noticed this on your T4s and on your pay stubs. The reason this is done is because the government does not want everyone owing $5,000 or $6,000 at the end of the year. They do an estimate to determine how much you'll probably owe, and that's what's deducted off every paycheck. So when you talk about a tax refund or owing taxes at the end of the year, this isn't some sort of punishment. This isn't some sort of prize. It's basically settling up your tab with the government. Just like if you went to a restaurant or a bar and you ordered food, at the end of the night, you pay a bill. But if you made a payment in advance, you might end up having some money left over, or you might owe a little extra. The same thing works with taxes. You owe the federal government a certain amount of money, in this case $3,600, and you owe provincial tax of $1,800, and that ends up being $5,400 and change. In our scenario, this employee has had $6,000 deducted, and they also have something called the climate action incentive, which I'll explain in a moment. In total, this person has $6,224 in credits. The difference between those is the tax refund. So the taxpayer will get $774.22 as a refund, paid either by direct deposit if they're signed up or as a check. There was a really fun story in social media in the past few weeks where someone found out that there is a website with the CRA where you can look up if they owe you a check. If you have not signed up for direct deposit and you forgot to cash a check, they will tell you if there's still an uncashed check waiting for you to claim. I can share that after. I wasn't planning on mentioning that in the presentation, but I just remembered that. So that's a little fun tidbit. One other piece of trivia that I'll share before we move on is that if you owe the government $1.99, they don't ask you for it. But if they owe you $1.99, they're not going to give it to you either. So if you have the ability to plan your taxes, make sure that you don't lose $1.99. Now, I was talking about Ontario's special tax credits. What I was referring to on that last source deduction slide is the climate action incentive. Everyone in Ontario now receives this, and this is because of the current situation with the carbon tax and how it has or has not been imposed in Ontario. Because of what Ontario did, the federal government said, okay, we're just going to give everybody in Ontario a little refund. And this is supposed to compensate for the fact that gas prices and heating prices have been increased with a carbon tax. If you do not use a lot of gasoline, you are therefore not paying the carbon taxes, and this is a true refund. You end up with more money at the end of the year. It would take a lot of effort for you to determine if you're actually making a profit or not on this, but this is a little bonus everyone gets. If you are married or in a common law relationship and filing your taxes together, one person gets to claim this, and that's a decision that the two of you make when you're filing your taxes. And if you live outside of a large metropolitan area in the countryside, there is a larger credit. And this is all assessed based on your mailing address. Hope that makes sense. So one of the questions people asked were what deductions are available. I'm going to talk about your business deductions a little bit later in the webinar, but first I wanted to just go over some of the other credits because I said that fictional taxpayer had $15,000 in credits. That is a combination of what they paid for CPP, the Canada Pension Plan, employment insurance, and their basic benefit. If you happen to be 65 years or older, you also receive an age amount credit of $7,494. There are also special credits available if you are taking care of a disabled relative or child, or if you have a medical disability. If you believe you should be receiving a credit for a medical disability, you have to get a form filled out and signed by a medical practitioner. This is a very complex topic all in itself, but if you have questions about that, you can reach out to me offline about that. If you pay debt on student loans, the interest is also tax deductible. There's a typo in my slide that should say the interest on that debt is what's deductible. I'm going to fix that before we share that. Childcare expenses are deductible if you're raising a child. Tuition amounts are deductible for programs in universities and colleges. If you don't use up all your credits in 1 year, because students generally have lower income, you can save that for future years, and that's almost automatic. There are also credits, and there's a whole mix of them for people who have bought a home for the first time. If your spouse is not earning income, then you can get their personal tax credit. If you make donations to charity, that is also a very worthy action, and there are credits for that. If you adopt a child, if you make a home accessible, and if you have pension income, there are additional credits. These generally will not cancel out an entire tax bill if a person has significant income, but they do help reduce that bill, and I hope it's clear how that works now. If you live in Ontario, and I believe most of us here do, and the way that's determined is if you're moving across the country, the address that you live at on December 31st is your province of residence. So if you spent 9 months in BC or Nova Scotia, but you spent the last 3 months from October through December in Toronto, then Toronto's your home now, and you file your tax return as an Ontario resident. That's the general rule there. Ontario gives similar credits to what the federal government gives. They do not have a first-time home buyer's credit or accessibility grants. There is a special childcare credit, which is completed using a different form. If you are a senior citizen, you also get a special tax credit for transit. There used to be one federally, but it ended a couple of years ago. And I also alluded to the Ontario Trillium benefit. It is based on how much you pay either in rent or property tax. You're more likely to receive a bigger benefit if you're over the age of 65 or if your income is below about 40,000. I can't give you an exact number because the credit is a bit of a dynamic formula. And I actually punched in the numbers on some clients to see how much rent would you have to pay to qualify. And it really does depend on your personal situation. But these credits do exist. And if you're filing your own taxes, do remember to check to see if you're claiming them. And if anyone is joining the presentation late, I will just remind you that we will be sharing the slide deck and this is being recorded. So you can refer back to these notes. Now, something that will affect people who are in a good situation where they're earning a lot of money is that they may owe money to the CRA. If you're working as an employee of a company, they will generally set things up so that you do not owe a lot of money. $1,000 or $2,000 might be the max. If you have a lot of success investing in the stock market, you might owe more. And the other scenario where you might owe money is if you have your own business. If you're working as a full-time employee at a company and also running your own business and that business is making significant profits, then you may end up owing taxes to the government. The government does give you a bit of a freebie. The first year that you make major profits, well, you'll end up paying the taxes that you owe. But if you're expected to keep on doing this year over year, the government does not want you getting a free $5, $10, $20, $50,000 loan in the form of not paying your taxes in advance. They will ask you to make installment payments. Those installment payments follow another set of formulas. But in brief, if they expect that you would owe, I don't know, $6,000, they would usually make you make 4 payments of about $1,500 throughout the year. That way, when it's a normal year and you're paying your taxes on April 30th, your taxes owing should be more or less zero because you were going to owe $6,000, but you paid $6,000 in installments throughout the year. This is not a permanent state of affairs. If your business ends up not generating as much income, or if you quit your other job, you can make smaller payments. But what you have to make sure that you do not owe more than $3,000. If you're supposed to make installment payments and you choose not to, the CRA can start to penalize you for late penalties. I'm not going to get too much into penalties and charges, but the general concept here is if the CRA is asking you to make a payment, you should do it. If they are wrong, you can object to to what they're asking for, and you have to make your objection within 30 days. If you're in a situation where that's going on, it is a good idea to engage a professional tax preparer to help you deal with that scenario. But generally speaking, follow the formulas. They are pretty straightforward, and it's only where we get into self-employment scenarios that things start to get quite a bit interesting. So when it comes to preparing for tax season, here's just some best practices. Open your mail. When I help clients, this is not Linda, this would be other clients, a lot of them don't bother opening their mail. They give me a sealed envelope from the government and they just expect me to go through everything. It's really important that you feel empowered to know what's going on in your personal finances. So when the government sends you a letter, take a look at it. If you get a T4 slip from an employer, take a look at it. Make sure the numbers are correct. They really should be, but there's no guarantee. So take a look. If you have donations you made to charities, some of them will email you their receipts. Others will also send you a letter with your tax receipt. Don't lose those. Those are valuable. They can reduce your tax bill by 15, 20+% of what you owe. In addition to just checking your mail, you want to make sure anything that's been submitted electronically in your name has also been properly accounted for. There's something called My Account on the Canada Revenue Agency website. And again, there's a link to it in the notes of this presentation. You have 24/7 access. They're closed from 3 a.m. to 6 a.m. But almost every hour of the day, you can log in and find out if they owe you money, if somebody's reported that you've earned money. They're really automating a lot of this process. Some people may complain about the way Canada runs taxes and say, how come we can't just press a button and have them do all the math for us? We're actually getting really close to that scenario. And if you work a normal 9 to 5 job, normal, that's almost possible now. But if you are self-employed, you have your own numbers. And that's why entrepreneurs are the people who are probably going to be the last ones to get automated tax prep. There are things you need to keep track of yourself. So make an appointment with your tax preparer or download the software of your choice. I do not push any one service or provider, but there is one program which is free with virtually no strings attached, which I'll talk about in a minute. And organize your receipts. If you are hiring someone to do your taxes for you, do yourself and do them a big favor and add up the numbers on your receipts. It really helps a lot because their time is expensive, and if they're charging you by the hour, they'll charge you more just to add up some receipts. That's money that you could save if you do it yourself. So that's just the best practice right there. A few questions that came up which are linked to what we just talked about. How long do I have to hold on to my receipts? The CRA asks that you keep all tax records for 6 years after filing. So when year 7 rolls around, you can throw them all out, put them in the shredder, have a liberation bonfire, whatever works for you, do it safely. If I'm working a full-time job and I also have a side business, do I have to file separate tax returns? Now, we're not going to talk about corporations because corporations do require their own tax returns. But if you work as a consultant, as a gig worker, any sort of side job, you do not have to file a separate tax return. Instead, everything goes on your overall income tax return. There's a special form that you have to fill out, and that makes that. And we'll talk a little bit about that. When do I need to register for an HST number? If your business's income is going to exceed $30,000, then you need to file for an HST number. There's a little bit of complexity here, and I've added all that complexity to the details because I could easily waste 20 minutes talking about it. But the short answer is, if you earn over 30,000, that's when you get an HST number. Do you have to have one forever? Yes and no. If your business continues to operate, even if your income falls below 30,000, you need to keep that HST number in effect. However, if you're going to shut down your business, then you can wind it down. You have to settle up with the government, file your final return, and then file a special form to shut down that number. Fun story, if you decide one day to restart your business, they can reactivate a number you shut down. But it is a bit of a headache, so try not to play with it. It is not a light switch. You do not want to turn that on or off. People also wonder, does it make a difference if I call myself a consultant, a contractor, or a freelancer? Generally speaking, the answer is no. And there's one exception. And it's not really about what you call yourself, it's about how you're paid for your work. If you're working as a salesperson and you're being paid on commission for your work, you are eligible for additional deductions off your taxes. There's not a long list, but there's a few, and we'll get to them. That is the one scenario where the type of work you do does matter for the expenses you can deduct. Otherwise, the way you describe your job does not really matter. You can be any of those, and if this is a separate business, then you're good to go. We could have an entire seminar on what's the difference between an employee and a consultant, because a lot of companies will hire people. You come to work there from 9 to 5 and you get paid by them. And then they say, oh, but you're not really an employee, you're a consultant. There have been a lot of discussions and debates about this in tax court. If you are able to work for many clients, not just that one that you usually report to from 9 to 5, and they're not the only source of income, you're more likely to be considered a true consultant or contractor. But if you're pretty much an employee, even though they don't treat you like one, your tax situation is different. And I do not want to get bogged down in that, but just be aware that there is some complexity there. And time permitting, we can talk about that some more, okay? So first freebie of the night, how do you file your tax return for free? There is a lovely person who I've never met. He or she is not paying me anything to share this, but there is a program called Studio Tax. I have played with it. It's pretty slick. It's not really complicated. You don't have to pay anything. And the most important thing, if you're privacy conscious, is the program is installed on your personal computer or mobile device. It now runs on Android. And you hold on to your tax documents on your own. A lot of the other free programs operate in the cloud, which means the other company holds onto your tax data. If you're okay with that and you prefer their product, good for you. Personally, if I were to use a free program, I would use this product because you have everything saved on your computer, and if you want to make a donation to the creator, you can, but you're not obligated to do so. It is the safest, freest program that there is. So there's the link, and if you prefer a different program, that's okay with me. But just be advised, you do not need to pay $20, $30 or more for programs. You can do this for yourself. You can file up to 20 tax returns if you have a lot of family members that you're helping. If you're filing more than 20, the software kind of locks out because professional tax preparers are expected to use professional programs. I can't get around that. I have to pay for a professional version. There's a professional version of Studio Tax. I have another one that I use. But for personal tax returns for yourself, you have a free solution there. Okay, so incorporation versus self-employment. What's the difference between these two? If you incorporate, you have several advantages. The corporation that you operate will send out invoices to the company or the client that you're working with. Now, you can send out an invoice as a self-employed individual too. The difference is when you send out an invoice as an individual, as soon as that cash arrives in your bank account, that counts as income for the current year, and you're going to pay tax on that. If your corporation makes money, the corporation will owe taxes, but you don't have to take the money out of the corporation right away. So people can use that as a legitimate way to shelter their income. Shelter is a very loaded term. There are things called illegitimate tax shelters. But in a corporation, you can hold on to money and let it sit there, and you can then reinvest it in your company's operations or save it for a future year if you need it. So managing a cash flow is a major advantage for corporations. If your business is sued, and I have friends who work in areas such as personal fitness, if you were sued by your customer because they tripped and fell or had a medical emergency, if you were working with them as a self-employed person, they could go after all your personal assets because your company represents you and everything that you own. So your home or condo, or your car, anything that you own could be subject to a lawsuit. And if your insurance, assuming you have some, does not cover all your losses, they could try and take those things away from you. If you run a corporation, on the other hand, if you're sued, your corporation is on the hook. So if the corporation has insurance, it'll pay out. Worst case scenario is the corporation goes bankrupt, but you don't lose your home or condo or car, what have you. So that is a major difference. If you are a serial entrepreneur and you're planning on starting up multiple businesses, there is an advantage to having a corporation. You can sell share capital and get other investors in your company more easily if you have a corporation. Whereas if you're self-employed, it's usually a one-person show. A self-employed business can have employees, but that just operates a little bit differently. So if you want to have lots of coworkers and manage your risk and grow and scale your business, a corporation makes sense. But if you are just trying something out and you're not sure if a business is going to start, perhaps you're doing web development, a new social venture, it's often a lot cheaper and faster to start your own self-employed business. You do not need to register with the government to start working. You can just start working and collecting money. You only file that one tax return. Corporate tax returns can cost $500, $1,000 or more to file. And if you're running a corporation, you need to get a lawyer involved. There are low-cost options, but generally speaking, it will cost extra money. So if your business is very small and does not have a lot of scale or a lot of risk, incorporation does not make a lot of sense. But if you're comfortable with the way you're doing things, you can run a business self-employed. You can get an HST number even if you run a self-employed business. There is a lot more pros and cons to this, but I wanted to give you a quick little rundown there before we continue with taxes, okay? Again, if you're running a corporation, you file a T3 tax return. There's a lot of different effort involved. I have colleagues who specialize in corporate tax returns. I only work on personal returns because that's my niche, and I like to specialize in an area where I can give people the best advice. So this brings us to some of the other questions you asked in advance. One person asked, how do I declare income from overseas? This is relatively straightforward. All you need to do is convert what you earn to Canadian dollars and enter it on the appropriate tax return line. So if you have other employment income, you can enter it on that line and then just take the rate, the tax rate for the country that you're dealing with. The CRA has their own webpage, which has common tax rates, and they accept other rates too. Some people will use an average tax rate for the entire calendar year. Other people will use a precise exchange rate from the day when they actually receive the money. The latter is preferable, and it also means a little bit more work. The CRA is not too picky about which of those approaches you take, as long as you're consistent. They don't want you cherry picking the average rate for the whole year if it's in your favor, and then the daily rate if it's also in your favor for a different piece of income. So pick one approach and run with it. Consistency is key. They really don't want to see you cherry picking. Another question is, what's the difference between salary and dividends? And this goes back to the point I was just making. If you run your own business and you want to pay yourself, if you're incorporated, you can either pay yourself a salary, which is normal income, like the example that we had, or you can pay yourself a dividend. So what happens is you are declaring a dividend, which means you are now taking out a share of your company's profits. Your company was already taxed when it earned that income. When you receive that dividend income, you are therefore taxed at a lower rate because the government is trying to keep things fair. So part of the money that you earn is now part of the money that you earn has been taxed through the company, and part of it will be taxed on your personal return. There are some scenarios, especially if you run a small Canadian business, where this may be a small benefit to you, where you are actually saving a little money because the company is being taxed at a lower rate, and perhaps your income is lower when you take the dividend, and you're also being taxed at a relatively lower rate. Some people spend a lot of energy on making this little trick work for them, and it is a legitimate strategy when employed properly. So that's just something to keep in mind. And are there penalties for not reporting income? There definitely are. The first time you do not report your income, the CRA may charge you 10% of what you did not report. So you have to pay not only the taxes that you owe on the money, but an additional 10% penalty. So it's good to be honest. The CRA is not perfect. The government's not perfect, but we run a society and we need to fund it somehow, and they are trying to keep people honest this way. So let's talk a little bit more about expenses. If you have moved either for school or work, you can then claim the costs associated with moving to your new location, assuming that you've moved 40 kilometers closer. The reason we have a 40-kilometer rule is because the government does not want people moving from Roncesvalles to Leaside and then claiming a fancy deduction on their tax return. It's meant for people who are basically moved from one city to another to be closer to their job. There is a very complicated list of things you can deduct when you are moving. I'm not going to go through the entire list. The list is in the notes, and if you're not sure, feel free to reach out and ask questions. One thing to keep in mind is that if your employer has already reimbursed you for your moving expenses, you don't get to double dip. Either you're claiming expenses no one paid you for, or they paid you for the expenses, so it cancels out what the money that you lost by moving, and the government won't tax you on that reimbursement. So that's a good thing to keep in mind. Another very popular question is, what is the deal with a home office? Okay, a home office must be one of two things. It does not have to be both. It has to be your primary place of business, or the space in your home that you use to earn business income, and use it on regular and ongoing basis to meet your clients, customers, or patients. So a few things about this. If you have a very small home, let's say a little bachelor condo, you might be using your living room for half the day for work and for half the day for living. In that case, you are only going to be claiming half of that space off your income taxes. So if you have 1,000 square foot, actually that's very large, let's say 200 square foot unit, and 100 square feet is used as the home office, that means half of your expenses would in theory be deductible. But if you're only using that one half the time, half of a half is what you claim. So 50 is half of 100, 50 over 200, or 25% of your expenses is what you would be claiming. 25% is a pretty high ratio. If you have a larger home, the CRA usually expects 5 or 10% to be the number. But if you have a small place and the CRA ever questioned you, you could say, this is my home, this is where I work, this is where I write my books, see my clients, do my work. And you will defend your tax claim successfully if you can show that this is a dedicated space used for your business. One thing to keep in mind is that you can't deduct everything off the return, okay? And I'm seeing a really good question come in about that, and I'm going to address that in a moment, Amy. I like that. I will definitely talk about it in a moment, Amy. I've been trying to avoid the chat because I know it'll throw me off my train of thought, but I knew that this was probably going to be right on point. So before we get into social distancing and what that means, let's talk about which home office expenses can be deducted. Permitted expenses include a portion of expenses such as electricity, heat, and water. If you are commissioned employees, remember how I mentioned you have people who are salespeople? They can deduct a portion of their property taxes and home insurance. And there's also mortgage interest and maintenance and cleaning materials. So what you do is you take all your bills for the year. Let's say that you have $1,000 worth of electricity bills for the year. If you live in a very small home, that $1,000 is entered, and your tax software will automatically have the ratios that you inputted. So it'll say $1,000 times 25%, you're claiming $250 against your income because that was the electricity you needed to run your home. Same exercise is repeated with the other expenses. Now, the question that came in was, okay, we're doing all this social distancing, we're working from home. What happens now? If you're in a situation where you have to work from home and you are now using a workspace that previously was not used, you can begin to claim it. There are two major catches to this. Number one, if you're self-employed, you probably were doing this already, so that's not really a catch. If you are a salaried employee, so you work for a company, but they're asking you to work from home, you will need to get them to sign a form. There's an official government form, and I will share that with you after. I'm pretty sure I know the number off the top of my head, but I don't want to guess wrong. When they sign that form, they will sign a form that says, Amy, from March 20th until April 30th, or whatever the time period may be, you're required to work from home. This percentage of your home was used for business purposes. We did not reimburse you for these expenses, therefore you can deduct them from your income because we asked you to work from home. I hope Zoe is taking notes for me. I have one typo to fix, and I have the name of that form to share with you all. I will include that in the final version of this deck. This is a very good question and very relevant. So thank you for that, Amy. And I'm just going to take a look at the other questions right now. Denise asks, how about if you're working both from home and from a co-working center like CSI? That is allowed. If your CSI fee should be deducted as a rent fee or an admin fee against your personal expenses, and we're going to go through the whole list of expenses. And your home is another place where you carry on business. So you can claim both of these. If you're a renter and not a homeowner, you're going to be claiming a portion of your rent. You will obviously not be property taxes because the landlord is presumably paying those. But take whatever your rent bill is for the month, let's say it's $1,000, and let's say that a quarter of your space is used for work, you'll be deducting a quarter of the rent. There's a couple of questions about the bathroom and kitchen and the time of use. Okay, so when it comes to which portion of the home you're using, you can use a fraction. You can basically round things a little. If you have a floor plan because you have a pretty complicated house, then, sorry, let me just stop right there. Basically, if you do have a fixed part of your house that you can basically run a tape measure around, that is the area that you would count as the home office. I wouldn't really stretch it to include other parts of the house. Now, If you have a dedicated bathroom that is actually used by your customers and you can point the CRA to that, and because you have 2 bathrooms in the home, I would argue that would be a legitimate expense, but it really does depend on your situation. If you are using a portion of the kitchen, some people who are more aggressive in filing their return could argue that this is the business part of the kitchen. This is like, this gets really complicated in a hurry, so I'm going to put a pin on that for a moment. But the short answer is it really depends on what your business does and how much space you're talking about. Go for something that is reasonable, that represents the part of the house that you legitimately are using. The other big question that was asked is, well, what if you're using the room for part of the day for work? The next question is, well, do I only count the 40% of the day that I'm working in that room, or the 70%? The answer to that is, if that is a room that is primarily used for work and the rest of the day you're not even using it, claim 100% of that room 100% of the time. And don't worry too much about the details of, but my oven uses this much electricity and the room uses this much. The CRA is nice enough sometimes, in this case, to say you can only use that room that's used 100% of the time, claim 100% of its fraction of the expenses. People get really hung up on the exact ratios and percentages. Don't stress too much about them. Follow the formula and you'll be okay there. I'm just going to check here. I'm not sure if we had a related question. We have a question about CCA, which I'm going to get to, and the next question I'm probably going to include in the next conversation too.
Andrew, I was just going to say that if there are some questions that maybe aren't on the current topic, then we can always take them at the end during the question and answer period. So
Thank you,
I was just going to say, I imagine there are lots of questions. So if you want, like, I imagine it might be a priority to run through the rest of your presentation, and then we can definitely hop back into the chat box.
That's a good point. Thank you, Zoya.
All right, no worries.
I love hearing from you guys, and I am such a sucker for going in for your Q&As, and we're definitely going to revisit that. But I am glad I peeked, because there are a few questions that I see that popped up in the box there, and people are asking, what about this expense? What about that expense? For example, some people are buying HDMI cables, little accessories for their computers, computer keyboards, mice, printer toner. The short answer to the question is, if I bought something for my business and it costs less than $500, generally speaking, you can just expense it 100% the year that you bought it. So I would usually use office stationery and supplies or office expenses. I would not get too hung up about whether I called an HDMI cable an office expense or an office stationery or something different. If you're buying something that's very expensive that costs over $500 and you're expecting to use for more than 1 year, it will be something that comes under the capital cost allowance, CCA. I try not to use too many acronyms or too much jargon, but CCA is something that is a very common term, so I'm going to use that one a bit. So I hope you're comfortable with that. Let me run through this list of common expenses. This is actually the list that you will see on tax forms. And people often get hung up on, but does that count as repairs and maintenance, or does it count as supplies? There are rules around that, and there's actually a link in this presentation to the CRA's official guidance. I'll try and give you the short answer to some of those questions, though, as we go through here. Advertising is hopefully pretty straightforward. If you are paying money for Google ads or an actual billboard or something in a newspaper or on TV or radio, straight up advertising, that makes sense. If you're dealing with meals and entertainment, this is a very popular and contentious topic, so I'll pause that for a minute. There are special exceptions. There was actually a real court case about a bicycle courier who was able to claim additional meals and entertainment costs for feeding himself, because that's how he does his job as a bicycle courier. But for the majority of people running a business, you are allowed to claim 50% of your meals and entertainment expenses. The idea being is we all have to eat, so you're getting a personal benefit out of this. But if you are taking a client out for a coffee or a lunch and you're picking up the tab, really good idea is to write down the name of the client you met with and the topic of the conversation. So if you ever are audited, you can say, no, this is Zoya. I took her out for coffee, and the $10 we spent or on takeout is a legitimate meals and entertainment expense. You go ahead and claim that. That is okay. But do keep some sort of log or record to make it clear what it was for, that it did have a legitimate business purpose. If you're running a company, there are special rules about how many parties you can throw every year. I'm not going to get into that because this is self-employment. But generally speaking, the CRA does not want to see people basically feeding themselves through their company every day of the year. But if you do have an occasional business lunch or coffee or dinner, that's generally considered completely fair as a tax claim. In terms of bad debts, if you have a customer who was supposed to pay you and you recorded income and now they're never going to pay you, you're writing off what they owe you, that would be a bad debt. Insurance is pretty self-explanatory. Car insurance, home insurance. Oh wait, we talked about, as I mentioned in the previous slide, home insurance is only deductible for commissioned employees, but if it's business insurance, things, liability insurance, that is something you can deduct. Interest, if you have any credit card debt or bank loans or lines of credit that you've incurred for purchases your business made, you can deduct that. If you're paying any special licensing fees or memberships, CSI membership, for example, would be a legitimate point to put in here. You'll claim that there. Office expenses and stationery, I think those are pretty straightforward. Professional fees, if you're paying a lawyer to set up any sort of contract for you, or if you are paying an accountant to do your taxes or help you with some bookkeeping, these are all things you can claim, of course. Management and administrative fees, this is kind of a catch-all, but it's kind of self-explanatory, I hope. Again, rent. Be careful not to double count rent. If your only rent expense is for your home, then you're either using it as a home office expense, and there's a separate field for this, or if you're actually renting a desk or an office somewhere, then you would be putting this in this field. Repairs and maintenance, if you're doing a repair to fix just the room that you work out of and you're repainting that room, claim 100% of the paint that or whatever tools you spent on that office room. However, if you're fixing the entire building that you work out of or the entire apartment, then obviously claim a fraction based on your home office space. Salaries, wages, and benefits. If you are hiring someone else to work for you, then you can deduct what you paid them, including any other benefits that they've received. If you own a property and are paying property taxes for your business, again, deduct that. Travel expenses, if you are using an Uber or a cab or public transit to get around the city to go to clients, or even Bixies, I would argue, the Toronto Bike Share, I would claim those expenses under travel expenses. Telephone utilities, I hope, is pretty straightforward, but I will pause on that. The CRA tends to get very, very picky about people claiming their cell phone expenses if they have just one phone. So if you have a phone that you use both for your personal purpose and your business purpose, you can ask yourself, do I use it roughly half and half? And if the answer is yes, I would claim half that expense on my business and just keep the other half as what I'm paying because I like having a phone. The rules have evolved very quickly over the past few years, so you may even see conflicting advice, but that is what I would do for my clients. This is especially true if you have a flat rate plan. Those are really good if you can score one of those because you're not incurring additional costs, and so the CRA won't accuse you of using all your data to watch Netflix when you could have been using it for work. And if you have a flat rate plan or if you're not going over your allotment of data, a 50-50 split is usually pretty good there. Now, what if you actually have two phones? One is a personal phone and you only spend $20 a month on it. You have a second phone line for your business and you spend $80 or $200 on it. Well, then yes, claim 100% of that phone for your business against your business expenses. And your personal phone is for your personal calls. This is small dollars, but I feel we're really connected to our phones so much that everyone always thinks about that. So I like to pause on that a bit. Fuel costs, usually not a big deal, but if you run some sort of business that relies on fuel, there's that. Delivery, freight, and express is basically your courier fees, your shipping fees. Motor vehicle expenses, if you are renting a car, leasing a car, or you own a car, there are a whole bunch of complicated formulas, but it's not that hard. If you're attending conventions, the interesting rule is you're only allowed to deduct 2 conventions per year. So if you go to a third one, your business technically can't expense it. Some kind of a funny rule, but that it is what it is. And that brings us back to CCA, which is a monster topic. Not because it's especially difficult. No, I'm lying. It's annoying because there are some very complicated rules about that. So if you're not familiar with CCA, the capital cost allowance is the CRA's permitted percentage of an asset that you can expense in any given year. If you've done any accounting, you'll know that when you buy a building or a car, it has an expected lifespan. So they believe that a building will in general last 40 years or that a car will last 4 years, 8 years, something like that. What happens is the CRA has its own rules. They say, actually, we believe that if you buy a computer program like Office 365 or Adobe, you'll probably have to upgrade it in a year, so you can claim 100% of its cost immediately. If, however, you are buying an SLR, a fancy camera, a new computer, they expect you to use it for at least 2 years, maybe longer. And so they have different classes. Computers are taxed, I believe it's class 50 at a 55% rate. I have links at the bottom of this slide which go into a mind-numbing amount of detail. But the short answer to how do I claim my capital assets is, if you're using tax software, you figure out which class it belongs to you. You enter how much money you paid for it and on what day, including all your taxes, all your delivery fees, all your install fees, all your extended warranties, bundle that all in there, and the tax software will do the math for you. If you enjoy suffering, you can do this by hand on a paper return, but I'll let you figure that out on your own, okay? All right. Another big question, and I'm going to try and wrap up quickly with the prepared remarks because I see a lot of questions coming in. Can I qualify for EI if I'm self-employed? Now, this is in addition to the emergency support benefits that we talked about because of COVID-19. These are regular benefits. Yes, you can. You need to go to the government website, and in this case, I do have the link right here. And you have to spend at least a year enrolled with Canada Employment Insurance Commission. And you can get maternity, paternity, sickness, compassionate care, and 2 different types of family caregiver leaves. You have to wait 12 months before you're eligible, and this is to avoid abuse of the system. It's not really fair, but that's just how it is. You have to wait a year because they want you to pay into the plan. Depending on how much money you make, you will end up paying up to $856, and then you will get 55% give or take of your income for the period associated with the benefit. The exact numbers are all on that website. I will give the government credit. They've done a pretty good job of making it relatively easy to read. Reading about CCA is really painful, but this stuff is actually pretty easy. So I invite you to visit that page if you want to learn more about that. There's one more point I'm going to make really quickly before we jump to the Q&A, which is that there is something called the File My Return service. It used to be called Telefile, and then they rebranded it after stopping it for a while. This is generally only used by, I'd say, retired persons or other people on a very low fixed income. I'm only sharing this because perhaps you do have relatives or perhaps you might be eligible for it yourself. Most people are not eligible for it because it's one of those situations where the government says, okay, we think we know everything about you. You receive this much in retirement money and that's everything, right? And if it's true, then the person owes no money, gets some benefits, and they're good to go. There's some information here, and if somebody is interested in this service, they've already been invited to use it. If you're wondering why you're not eligible, you can take it up with the CRA. All right, so Zoya, do you want to ask me some questions before I start reading through this really fun list?
I think so you did an amazing job, Andrew, of answering all the questions that came from the registration forms. And so I think we could actually start to tackle this list that is in the chat, if that sounds good to you.
Sounds good to me.
And just a heads up, everyone, we do want to be respectful of everyone's time and end at 7 or just before 7. And if you do have follow-up questions for Andrew, he's provided his email in the slides, so you can always reach out to him. There was a question that came up a bit earlier.
Go ahead.
So the question was, for someone who earns less than $10,000 but more than $3,500, would this person not owe tax and not need to file as they would be required to pay into CPP?
That's a great question. I'm going to have to double check what the exact rule is on that. Going off the top of my head, I believe there are some exemptions, but I'm going to take that one offline and add that in as a follow-up just to make sure I'm not giving you the wrong answer. There are exceptions where you do not have to be enrolled with CPP, and I will double check that one. So I will put a follow-up on that one.
Okay, awesome. Thank you. Another question that came up is, when is the Ontario special tax credit issued?
Now, if we're talking about the Ontario Trillium Tax Benefit, that one is paid out in 12 payments over the course of the year. It starts in July after you filed your tax return. If you are going to receive less than $360, I believe they send it to you as one lump sum, if I remember my numbers exactly. Otherwise, you get it in 12 small payments, and that's how the Trillium benefit is paid out. There is also the climate incentive that's canceled out against your actual tax return. And let's see, there's Trillium, there's HST. The HST benefit is paid out 4 times a year, and I don't remember the schedule off the top of my head, but I believe the next one's due in May, if I'm not mistaken.
Excellent, thanks. I think you spoke a little bit to this question, but we'll go through it just one more time.
Yeah, sure.
Given that many people are now working from home during social distancing, does that mean that employees can claim in the 2020 tax year the space they used to earn their employment income during the period they were required to work from home?
Perfect, yeah. And Amy, no need to apologize. I'm really glad for the question there. So you will be claiming, you know, I want to look this up right now. I believe it's I just had this form filled out actually for myself because a part of the work I do for the university means I have to actually get this form filled out too. And it is, yeah, there is a form that you have to have filled out, and I'm going to get back to you guys on the exact number.
Awesome. So perhaps Andrew, in the slides, or we can maybe, or just alongside that, we can have some additional notes to respond to some of these questions.
Yeah, yeah. Oh, and thank you for stalling for me, Zoya. It's the T2200 form. I will put that in the notes, though.
Awesome. Okay, great. Thank you. And I think you may have answered this next one. It was the question about if you're working both from home and from a co-working space like CSI.
Yeah.
How you can account for those expenses.
Yeah, you can definitely claim both. So claim CSI either as a membership fee or even if it's office rent. I don't think the CRA is very picky. Just pick one category and run with it. If I was a light member at CSI where I just have access, I would probably call it a membership. If I was actually getting a permanent desk or an office at CSI, I would claim that as rent. And if you're working from home as well, I would claim that as well. Businesses have more than one location, and you can have more than one location. So rest assured that is legitimate. You can do that. That is okay.
Great, thanks. Next question is, what if you are a renter and not a homeowner?
Yeah, so renters can't claim a lot of the maintenance costs unless they actually have to do the maintenance. But when it comes to the rent payment, you do claim that portion of your rent as an expense against your income.
Great, thank you. Another question, just on the electricity example, I understand why 25% is the space allocation for your office, but wouldn't electricity be based on the percent of hours per day or week being used for business?
Yeah, so like I mentioned, if the room is only used for your business, it doesn't matter that it's only being used for 9 hours or 8 hours a day. If you're not doing anything else in that room, just make it a straight allocation based on that space. The CRA can be very picky about a lot of things, but they let that one slide a little.
Okay, thank you. Another question about home office expenses. Do bathroom and kitchen count in the home office expense?
Yeah, so that one in general, I would generally exclude it unless you can argue that it is really part of your home office.
Okay. I think you did speak to this a little bit, but there's a question about what if I make my revenue in another
Mhm.
country and I pay tax in Canada? And then an additional question similar, what about if I give donations to international charities?
Those are really good questions. So if you pay tax in other countries, you can, when you're reporting that to the CRA, there are fields to enter foreign taxes paid. So they will deduct how much you owe in Canadian tax if the foreign taxes have already canceled that out. Donations to international charities, unfortunately, you generally have to claim that on a foreign country's tax return. And if your income is sufficiently high, it does make sense to file a return in another country. I've obviously skipped over a lot of the international stuff because that gets messy in a hurry. The unfortunate thing is if you do have American citizenship or even a green card, they expect you to always file a US tax return. So you've heard about some people actually renouncing their US citizenship because they've moved to Canada and they don't do business in America anymore. The Americans still want you to file a tax return whether or not you live there. Canada has looser rules. Um, but yeah, if you want to get a credit back for international donations, that really is an international tax return situation. And I'm going to jump right at that next question, Zoya.
Sure.
The question is, what do we do with the HST collected? Really smart question. Do not spend it all. Please don't, because you're going to be in a really hard situation. Put that money in a savings account that gives you some good interest. And when you file your HST return, you pay the government what you owe. One thing that I kind of skipped over in the presentation, because HST is its own topic in itself, in addition to personal income tax, but I will talk about this. You have two main methods of dealing with HST. You can either submit the exact ratio of how much you charge versus how much you had in expenses. So you collected $2,000 in HST, but you also spent money and you ended up spending $700 in HST. So the difference between $2,000 and $700 is $1,300. You send that off to the government. Done. If that's too much work for you to keep track of all those numbers and your business is eligible, their website can talk about this more, you can qualify for a special tax rate. So you just give the government an estimated number and they tell you what that number is going to be. You don't get to make it up. So it's around 9, 10, 11%, depending on where you live and your type of business. And so if you made $100,000 and you're at the 11% rate, you're going to send $11,000 to the government as your HST payment. I hope that explains that.
Awesome. Thank you, Andrew. I do want to be mindful that we only have a few minutes left. You did go through some of the questions about business expenses. So, Andrew, are there any questions in here that you feel maybe were a piece that was missing from the presentation, or anything that feels pertinent to answer with the time we have left?
Yeah, okay. I'm really going to quickly touch on the one about meals. You have to be having a meal with clients, generally speaking. It's not just expensing the food that you're eating. If you are buying things like a Zoom Pro account, professional development, you can either charge it to admin fees or one of the other expense charges like office expenses. Memberships in professional organizations, I would put under membership fees. So hopefully that addresses that. So CCA expenses, how do you manage them? Camera equipment. Each year you remove the equipment you enter the previous year and put the new equipment. Ooh, yeah, you do not want to do that. My internet connection is unstable. Can you all hear me still?
Yes, we can hear you.
Okay, good. Keep your old equipment in the tax software. Try not to remove it every time. That will make things very messy. If you need more help with that, please feel free to reach out to me. If you've registered for EI, do you pay contribution as part of your tax return? If you register for EI, you'll be making contributions as part of your source deductions when you pay yourself a salary. Do follow the guidelines from the employment insurance people for that. That it will be something in addition to the tax return there in general. Where do you enter your business expenses when you file your taxes? That's a really good question, Lavlet. If you're using a program that asks you an interview and it says to you, please let me know if you're running your own business, you can follow its examples. If you're following an actual form, there will be a form called a T777, and I'll actually include that in my notes after. So I'm just going to send a chat message to everyone saying I'll include the names of the tax forms for self-employment expenses, and including work from home and your personal expenses. So I'm just sharing that with you all, and that's just a note to myself so I don't forget. Going back to some of these other questions, do I speak for workshops for nonprofits or women entrepreneurs? We focus on tax on one of our workshops. I can do other workshops, so feel free to reach out to me if you have questions about that. If the contract involves travel, we pay for the travel expenses and are reimbursed. How is that reimbursement claimed? Okay, so you do not have to report your expense or the reimbursement if you are paid back for your flight. Essentially, it's just like a moving expense. If you are flying somewhere and you get 100% of your money back, don't worry about claiming the money they paid you back, because you're also not claiming the expense. It's a wash. The CRA doesn't care. The only exception to this is if they're only paying, let's say, half of your expense. In that case, you could basically claim as an expense the part that was not reimbursed. That is the most legitimate, fair way of doing that, and it's the most straightforward. You don't have to get too complicated about that. And if you have once gotten an HST number, but you don't expect to have one again, do you still have to continue reporting your HST? The short answer is yes. Let me just reread your question to make sure that I'm understanding. Yeah, even if your income falls below the $30,000 level, you still have to maintain your HST registration. So congratulations on hitting that target, and hopefully you will hit it again in the future. When you do file your HST return, there is a little bit of a bonus, which lets you get a small credit back. Go through the HST paperwork. It does, well, it's all online actually. It does explain how that works. If you're subletting, do you need specific documentation? Okay, so this is if you are basically operating as a sub-landlord, if you will, because you're renting out part of the place that you have. That is something that, feel free to reach out to me offline, because that gets really complicated. But if you have money coming in as income from other parts of the world, you should be declaring it as income. You can deduct any expenses you have against that space if you're doing that. Okay. I think that's all the questions.
Yeah, amazing. Thank you so much, Andrew. That was amazing. It was like a rapid fire question round. Thank you for your expertise. There is one more question, but we're going to actually wrap it up right now, and we'll include that one maybe in addition to the different notes and forms, if that's all right with you, Andrew.
Sure. Actually, I'll entertain Adeline's last question.
Oh, sure.
There,
okay.
Because that's a really fun one, and thank you, Marco.
Okay.
Is it legal for a client to ask you to share your HST number in a contract? I'm going to rephrase the answer to that. Some businesses only want to work with an established business that has an HST number. And if you anticipate that that will be a hard sticking point, that you won't get business because you don't have an official HST number, I would go ahead and register for one. There is no additional cost. Registering for HST number is really easy to do. You can go online and get it done within a day or two. If you need any help, feel free to reach out to me. And if you plan on having a lot of business with that client, it's worthwhile because they need to deduct the expenses they have working with you. And it does make you look a lot more professional that you are a growing business. You do have an HST number. It's not a penalty to have. It's just a cost of doing business is how our economy operates. So I hope that helps.
Awesome. Thank you so much, Andrew. Lots of gratitude from the CSI community and everyone who's joining today. Just a very quick note, we have a feedback form. We love seeing all the positive feedback right now that's in the chat, and we would love to capture that and make sure that we can also take into account your feedback for further sessions, or if there was another session, what you would want that to include. So thank you so much. And Andrew, you have so much incredible knowledge on this topic, and yeah, we really, really appreciate your time. Thank you so much for presenting and for making space for this presentation. And thank you to everyone who joined. We hope that was a helpful introduction. And definitely keep an eye out. We'll be sending you a follow-up email that includes Andrew's slides and the presentation notes, as well as a recording of the session tonight. And if you have any further questions, you can send me a note at zoya@socialinnovation.ca. And yeah, we will see you very soon, hopefully for another online session soon.
Thanks very much,
Awesome.
everybody. And thanks for all the kind words. Really appreciate it. Feel free to reach out to me, tax@westdown.ca, online, or at Westdown Tax on Twitter.
Awesome. Thanks. Take care, everyone.
Take care. Stay safe.